Well, good afternoon, and welcome to today's Smart Investing Briefing. We got some important things to talk about today. First off, we're going to jump right into the JOLTS report, which is Job Opening Labor Turnover Survey. The number beat expectations and points to a stronger labor market. I just love this report. It's one of my favorite economic reports.
Yeah, Gary Cohn, who's used to work with or Goldman Sachs and was in the White House for a little bit, says this is one of the best economic reports you can look at. I mean, it's just so useful.
I guess I'm a good company then.
Yeah. And he says, he doesn't say. The JOLTS report came out, 7.6 million job openings.
Incredible.
Was better than the expected 7.3 million. And that 7.3 million was also the number we saw in December. So beat month over month, beat the expectations. And get this, the number of Americans that are currently unemployed, according to the last survey here, 6.5 million people.
And that's the key, because that tells you that there's more job openings than people to fulfill them. That's an important factor in how strong our economy is. And the other thing too, people are worried, oh, it's going to stop and so forth. It's not going to stop. This is positive economic information.
Yeah, no, absolutely. And the big thing it points to is continued wage inflation, because more people are fighting over those jobs, which
Right.
means you're going to have to pay more for those people to work in those jobs.
Yeah.
And also we looked at the quits rate. But that was up quite substantially as well. It went from 3.4 million to 3.5 million. So more people are quitting their jobs, pointing to, again, more strength.
Yeah, because they feel secure that, I can quit this job and find another one. So very good information for the economy. Don't worry about the economy turning down at this point in time. Also do want to talk about Facebook and Google. Are they become too powerful? Because they have a lot of power now. They're so huge, the things that they do and so forth. The concern is maybe they're too powerful, and talk about breaking them up.
I mean, why are they too powerful? They have so much data. That's the big concern. I mean, I know right now you go on Google. I mean, I was actually just buying a car right now, so I was looking a lot at different auto dealerships and stuff. You go on Google, you see all these ads now. Anytime I go on there, it's car dealerships. They just know I was looking for a car. They know so much about everybody. It can be quite dangerous if it's not protected properly.
Yeah, because they have a lot of information. This reminds me a little bit of the breakup of AT&T back in 1982. They broke up AT&T, now a little bit different because they were broken up because of monopoly, as far as people would have to pay too much and they couldn't compete and so forth. So that's why they broke up AT&T. There was positives to it, but in the beginning it was a mess. It was hard and so forth. This is a monopoly of not money, but data. And that's what they're concerned about, the data, because they can do a lot with that data.
Yeah, absolutely. And I mean, what does that breakup mean for these companies? It could be quite dangerous for both of their stock prices, because, I mean, a lot of people don't realize Google, have YouTube, they have Waymo. You're not really going to be able to leverage those different businesses together. They're going to be their own entities, which means you might not have as much of a lost leader. Or in Facebook's case, Facebook's numbers have not been looking so hot.
Right.
Instagram's kind of been carrying that. If you break up Facebook and Instagram, Facebook might struggle, and it might have a big impact on the stock price.
Exactly. And the thing too, and I love this one too, Chase, I get in my car, it says 10 minutes to the gym, when I'm going to work, 10 minutes to work. It knows where I'm going because it remembers all this information, and that's what scares me, is that they have this information. And why I think it costs people more is that when they break that up, kind of like when the AT&T deal, well, you're going to have to pay for this service because this service before was maybe subsidizing the other service. So that's the problems for consumers. But do we want one company to have all that information and use it for their own good? I don't think so.
Yeah, I think it could be a little bit dangerous. And I mean, we've seen some things with the Analytica with Facebook.
Yeah.
I mean, there's been some problems over privacy, and you don't want a big outbreak of your daily routine. That would be catastrophic if somebody actually knew where you were going all the time. And the big thing that I think is wrong with these stocks is I don't think that the regulatory risk is properly reflected in both of them. They both trade at about 20 times future earnings, which is expensive given those regulation risks.
Not super expensive, but again, expensive enough to say, wouldn't be buying it, probably be selling it now, look for something else. But if you want more information on what to buy, sell, or hold, turn on the Smart Investing Show tomorrow morning at 8 o'clock on AM 760 KFMB. You can listen by podcast, on your smartphone, by the radio. Anyone want to listen to it, you can tune in tomorrow morning at 8 o'clock on AM 760 KFMB. I'm Brett Wilsey. Have a great afternoon here.